Hello everyone, welcome to Brilliant Bankers. This is part 4 of the video in AML KYC, and today we'll be completing the module 1, that is AML, Anti-Money Laundering. So we'll start off with the role of IBA in money laundering. So what are the roles of IBA and what is IBA? As all bankers we know, IBA means the Indian Banks Association. It has a working group on money laundering, which is an essential body in India's financial sector that supports banks in adhering to the AML regulations and enhancing their AML practices. So here is how the working group contributes to the effectiveness of the AML system. It has objectives like support compliance with the RBI regulations. All the regulations that are put up by the RBI is to be supported by the IBA, like the regulatory element. The working group helps banks align their AML practices with the guidelines set forth by the Reserve Bank of India, ensuring compliance with national regulations. It provides practical guidances on implementing RBI's AML guidelines and requirements, and also assisting banks in maintaining effective AML controls. It also helps and promote industry best practices by standardization, like practicing across the banking industry, standardizing all the work or the AML framework throughout the banking industry and promoting consistency and effectiveness in AML measures. It also helps the banks benchmark their AML practices against the industry standards and regulatory expectations, fostering a uniform approach, as said earlier, in AML policies. It also has specific activities and initiatives that are being undertaken. Some of the specific activities that are undertaken by the working group are developing industry best practices. The working group developed comprehensive AML guidelines and frameworks that are tailor-made to the needs of the banking sector. These documents outline the best practices for AML procedures, risk management, and their compliances. It also provides model AML policies and procedures that the bank can adopt and customize according to their specific needs, ensuring they meet the regulatory requirements. They also facilitate training programs, wherein the working group organizes training workshops and seminars for bank staffs, focusing on the AML compliance and regulations. All the requirements are to be done as per the compliance also, and the emerging threats that are on the rise. It also may offer certification programs. The IBA also may offer certification programs to enhance the knowledge and skills of the AML professionals within banking system, ensuring they are equipped to handle the AML responsibilities. They also provide guidance and support to banks in implementing and maintaining the AML controls. This include a lot of ways, like answering queries, providing clarifications on the regulations, and offering advice on the best practices to be carried on. They also promote awareness and communication, that is by dissemination of information. These information are disseminated on a regulatory updates emerging on AML threats and the industry trends to keep the banks functioning and the banks prepared for all these threats. It provides a feedback mechanism for banks to share their experiences and challenges with AML compliance, helping the working group refine its support and guidance. So, what is the role in enhancing India's AML system? What is the role of IBA in enhancing India's AML framework? It's by strengthening the compliance, by promoting industry best practices and providing guidances. The working group helps ensure that AML practices are uniformly implemented across banks, enhancing overall compliance with RBI regulations. They also provide the training programs and technical support to enhance the capacity of the bank staff for managing AML responsibilities effectively and also contributing to a stronger AML framework. They also facilitate collaboration. The working group fosters collaboration among banks, which enables them to share insights, experiences, and solutions that are related to the AML challenges. This collaborative approach always strengthens the collective response to the financial crimes. It also acts as a liaison between the banking sector and the regulatory authorities, facilitating communications between them and also ensuring that the bank's concerns and feedbacks are considered in regulatory updates and reforms also. It also enhances the effectiveness by the development and dissemination of industry best practices. It helps the banks to improve their AML controls and procedures, making the AML system more effective in detecting and preventing the financial crimes. The working group activities support the continuous improvement of the AML practices within the banks and also ensuring they adapt to the new threats and the regulatory changes also. Overall, we can say that the IBA working group on AML plays a crucial role in supporting banks, ensuring regulatory compliances, and enhancing the effectiveness of the AML system that is presently available in India. Through its various activities, the working group helps build a robust and resilient financial system that is well equipped to combat money laundering and terrorism financing. Now we will go through some of the softwares or the ways of screening and what are the benefits of AML screening software. The screening softwares that are being used in AML technology. Technology has become a critical tool in automating tasks related to transaction monitoring, identifying suspicious patterns, and improving the efficiency in anti-money laundering efforts. So technology can enhance these tasks and look at various software options available. How do technology enhance the AML test? It can be done by automated transaction monitoring, wherein you have a real-time analysis. Like technology enables the real-time monitoring of transactions, allowing for immediate detection of potentially suspicious activities. Like if you're having a bulk transaction of a small amount in different accounts at the same time from a particular account, or a credit to a particular account in small amounts from different accounts. These are, if it is automated, it is easy to find out. Or if it is a manual thing, it's a bit difficult for us, being a clerk, to check it out. So automated systems can process vast amounts of data quickly, and they can flag transactions that deviate from the normal patterns. Automated systems also use predefined rules and thresholds to identify transactions that may be indicative of money laundering or terrorism financing, such as unusually large transactions or frequent transfers. Also, identifying the suspicious pattern. Advanced data analytics and machine learning algorithms can identify complex patterns and anomalies that may not be evident through traditional methods. This includes detecting layered transactions, unusual transaction sequences, and relationships between each entities. Technology can also analyze customer behavior over time, identifying deviations from established patterns that might suspect suspicious activities also. It also improves the efficiency wherein the and wherein automation reduces the need for manual data entry and analysis, freeing up resources for more strategic tasks. This improves overall efficiency and reduces the risk of human error. It also helps in scalability, like automated systems can scale to handle large volumes of data and transactions, accommodating the need of the growing financial institutions without a corresponding increase in the manual labor also. So software options that are available for AML are like the transaction monitoring system, like Actimize by the NIC. It provides a comprehensive suite for transaction monitoring, fraud detection, and AML compliance. It uses machine learning to detect suspicious activities and also offers customizable reporting also. The SAS anti-money laundering software. It uses advanced analytics to monitor transactions and detect suspicious behavior. It provides a flexible platform for integrating various data sources and customizing the detection rules. The KYC solutions are brought in by the Thomson Reuters World Check. It offers a global database of watch lists, sanctions, and politically exposed persons to support the KYC processes. It helps banks to verify each and every person with their customer identities and assess their risk also. Jumio, the software named Jumio, it provides digital identity verification solutions using the biometric and document verification technologies. It streamlines the KYC process and helps onboarding customers effectively. Some of the CDD tools are, that is, the customer due diligence tools are Refinitiv. It offers solutions for CDD, which is including risk assessment and the due diligence reports. It integrates data from multiple sources to provide a It integrates data from multiple sources to provide a comprehensive view of customer risk. Comply Advantage. It provides real-time data for banking and on individuals, and also the companies to support the CDD process. It uses AI to identify high-risk entities and assess the potential threats. Some of the case management systems are like the OFSAA, which can be said as the Oracle Financial Services Analytical Application. It includes a case management system that supports the investigation, and resolution of suspicious activities. It integrates with transaction monitoring and provides for the managing of investigations. The FICO Falcon. It offers a case management module as part of its AML solutions. It provides a centralized platform for managing alerts, investigations, and also reporting. It's not that these softwares doesn't have any limitations. So what are the limitations and the need for human expertise in these softwares? While technology significantly enhances AML efforts, it cannot replace the human judgment and expertise entirely. Some of the reasons being the complexity of money laundering schemes, the sophisticated techniques. Money laundering schemes can be highly complex and sophisticated, often involving multiple layers and jurisdictions. Technology may not always detect these integrate patterns and understand the nuances of certain activities. The false positives and contest. Automated systems can generate false positives, flagging legitimate transactions also as suspicious. Human expertise is required to review these alerts, assess their context, and also make informed decisions. Human analysts being conceptual, understanding, and industry knowledge that technology alone cannot provide. They can interpret patterns and behaviors within the broader context of the customer's profile and business operations also. It also helps in adapting to emerging threats. Financial criminals continuously evolve their tactics, while technology can adapt to some extent, wherein the human expertise is crucial for identifying new threats and refining the detection algorithms accordingly in the software also. Also, regarding the regulatory and legal compliances, the compliance with AML regulations often require interpreting legal requirements and guidance, wherein human experts are needed to ensure that the technology solutions are aligned with regulatory expectations and the industry standards. All in all, or in summary, about the softwares of screening, we can say that technology plays a crucial role in automating and enhancing AML process, but it is the most effective way complemented by human expertise. Combining advanced solutions with software with skilled analysts ensure a comprehensive and adaptive approach to detecting and preventing the money laundering and other financial crimes also. So what is money laundering and correspondent banking? In this slide, we address the specific risks associated with the correspondent banking relationships and the AML compliances. Correspondent banking relationships where one bank, the correspondent bank, provides services to another bank, the respondent bank. This facilitates the cross-border transactions and can be exploited by criminals to transfer funds across borders and also launder money easily. So understanding these risks and implementing effective practices is crucial for banks to mitigate the risk of AML. So let's discuss in a detailed explanation. So how is the exploitation of correspondent banks happen? It has complex transactions. Transfer of funds across the borders can be done. So here the criminals may use correspondent banking relations to conduct complex and opaque transactions that are difficult to trace. They can move funds through multiple intermediaries to obscure the origin and destination of the money. Layering and integration also can be done, wherein the correspondent banks can be used in layering schemes to separate illicit funds from their original source, making it harder for the authorities to detect and trace the money. These transactions may involve multiple layers of accounts and banks in different jurisdictions. The money laundering techniques that can be used with the help of the correspondent banking, like the use of shell companies or fictitious entities to execute transactions through correspondent accounts, disguising the true nature of the funds and the parties that are involved in. Correspondent banking can also facilitate trade-based money laundering, wherein criminals use trade transactions to move illicit funds across the borders using the guise of legitimate business and their business activities also. It is also a big abuse of banking channels. Criminals may exploit correspondent relationships with the banks in high risk or less regulated jurisdictions to move money more easily, taking advantage of their weaker AML controls. These may provide false, misleading information to correspondent banks to avoid scrutiny and facilitate the transfer of illicit funds. So, what are the effective practices for banks to mitigate all this? There should be enhanced due diligence. As we have discussed earlier, banks should perform thorough due diligence on correspondent banks, including assessing their AML controls, compliance history, and reputations. This involves understanding the correspondent bank's business, its customers, and its nature of transactions also. The banks also should evaluate the risks associated with each correspondent relationship, considering factors such as the correspondent bank's location, the types of transactions conducted, and the business model. Transaction monitoring of the correspondent bank is to be done, wherein automated systems can be implemented for advanced transaction monitoring. and which can help detect suspicious patterns and anomalies in cross-border transactions. These systems should be configured to flag unusual transactions and generate alerts for further investigations. Continuous review of and analyzing transactions conducted through correspondent accounts to identify and address any suspicious and potentially illegal activities is to be done by the correspondent banks also. There should be information sharing regarding these banks. And internal reporting is to be established for robust internal reporting mechanisms for suspicious activities detected in correspondent bank relationships. And it is also to be ensured that relevant information is shared within the bank and with the compliance team also. What does the compliance and documentation do? They maintain a comprehensive record of all correspondent banking relationships, including due diligence, documentation, transaction details, and the communications and with the correspondent bank. They also develop and implement clear policies and procedures for managing the correspondent banking relationships, ensuring ailment or alignment with AML regulations and best practices. So, what are the regulations and the guidelines governing the correspondent banking? We can go with the FATF recommendation I discussed earlier. As for recommendation number 13, it requires banks to conduct enhanced due diligence on correspondent relationships, especially where there is a higher risk of money laundering and terrorism financing. The recommendation 14 says addresses the need for bank to conduct due diligence on their customers' transactions and to establish effective control to manage risk associated with correspondent banking. Basel Committee also has guidelines as Basel III provides guidelines for managing risks in correspondent banking relationships, which includes requirements for due diligence, risk assessment, and transaction monitoring. The BCBS guidelines also says or provides guidance on managing correspondent banking risk and emphasizes the importance of effective AML controls and due diligence. The local regulations, as in India, the RBI guideline is to be taken into account, which mandates specific requirements for correspondent banking relationships under its AML and KYC guidelines. These include due diligences, procedures, and risk assessment. The Financial Crimes Enforcement Network, the FinCEN, in US, the FinCEN provides regulations and guidance on correspondent banking, which includes the requirements for due diligence and monitoring to prevent money laundering and terrorism financing. So, by implementing these effective practices and adhering to relevant regulations and guidelines, banks can significantly reduce the risk associated with the correspondent banking relationships and enhance their AML compliance efforts. This proactive approach always helps safeguard the financial system from being exploited for illicit activities. Hi, I have not introduced my channel yet. We are the Brilliant Bankers, your channel for IIBF specialization exams. Do like us, like a video, help us by sharing these videos and also subscribing. Let's continue. What are the exchange companies? Exchange companies, those including the currency exchange and money transfer services, are particularly vulnerable to money laundering, which is due to their cash intensive nature and the relatively smaller transaction sizes that they often handle. So, here is how they are vulnerable, that the relevant regulations and reporting requirements and best practices to mitigate the AML risk. The vulnerability of exchange companies are because of their high cash intensive operations. Exchange companies handle large volumes of cash transactions, which can be used to move illicit funds with minimal detection. Criminals can exploit this by conducting multiple small transactions to avoid the detection. They also have anonymous transactions, where cash transactions can be conducted anonymously, making it easier for money launderers to conduct and conceal their activities without leaving a trace for anyone. The smaller transaction sizes. Smaller transactions can be used in layering schemes to obscure the origin of the illicit funds. Criminals can use multiple small transactions to integrate funds into the financial system. And also structuring. The use of smaller denominations allows for structuring or the smurfing of transactions, where large amount of illicit funds are broken down into smaller, less suspicious amounts. So, what are the regulatory requirements of exchange companies? As per the FATF recommendations, the Financial Action Task Force provides guidelines applicable to exchange companies, with the key recommendations include, which is recommendation number 10 of FATF. They require customer due diligence measures for exchange companies also, including verifying the identity of the customers and understanding their nature of transactions. The recommendation number 16 obligate exchange companies to keep records of the transactions and the customer information. The local regulations in India says the Reserve Bank regulates exchange companies under the AML framework, which include specific guidelines as KYC compliance, ensuring that the exchange companies verify the identity of the customers, the STRs, the suspicious transaction reportings, require exchange companies to report suspicious transactions to the FIUIND also, not only the banks, it's also the exchange companies. And record keeping is also be done, which mandating that each exchange company maintains records of transactions and customer information for a specific period, that the records is not to be destroyed. Some of the international regulations on the same are the US regulation says under the Bank Secrecy Act, exchange companies in the US are required to implement AML programs, to develop AML programs that include risk assessment and internal control and employee training. It also has to file the suspicious activity reports, that is the SARs, to the Financial Crime Enforcement Network, that the FinCEN in US. It also has to keep the records, as the case in India is the same in US also. So what are some of the best practices for the exchange companies to mitigate the AML risk? That is carrying out the CDD, identify verification is compulsory, that is they should implement robust procedures to verify the identity of customers, including checking the identification documents and using biometric verification whenever possible. Risk-based approach assess the risk of each customers based on factors such as transaction volume, geographic location, and nature of their business. Also apply enhanced due diligence for high-risk customers also. The record keeping is to be done. Transactions are to be maintained or detailedly maintained, including cash exchanges, transfers, and receipts. This ensures that the records are easily accessible for audits and investigations also. The customer information is to be kept for records and customer identification and their transaction history. The required period of retention of all these things is typically 5 years or more. Suspicious activity reporting is also to be done. Use of automated monitoring systems to detect suspicious patterns and anomalies in transactions. It is also to be ensured that the systems are updated to reflect evolving AML risk and trends. Employees are to be trained for the same. AML training programs are to be conducted on a regular basis with training sessions for employees on AML policies, red flags, and reporting procedures also. And it is also to be ensured that the staff are aware of their responsibilities and the importance of the ongoing compliance. So, what are the internal controls and audit programs? AML policies and procedures. It is to be developed and implement comprehensive AML policies and procedures that address risk management, customer due diligence, and transaction monitoring. Independent audits are to be conducted regularly for the best AML practices to assess their effectiveness and identify the areas to be improved. So by adhering all these best practices and complying with the relevant regulations, the vulnerability to money laundering and enhance their overall AML compliance. So let's come to our last topic, the foreign branches. So let's explore the specific challenges and considerations for implementing AML controls in foreign branches of the banks. It comes like the managing anti-money laundering compliance across different jurisdictions. It presents significant complexities due to varying regulations, cultural contexts, and also operational environments. So what are the AML challenges for foreign banks? One is the diverse regulations. Different jurisdictions have varying AML regulations and requirements. This can include differences in the CDD standards, reporting obligations, and the definitions of suspicious activities. The regulatory updations or the regulations may change, frequently requiring banks to stay updated and adapt their policies accordingly. Some of the cultural and operational contexts are like local culture norms and business practices can affect how AML controls are perceived and implemented also. Understanding and respecting these cultural contexts is crucial for effective compliance. The operational environment in each jurisdiction, including the level of regulatory enforcement and the maturity of the financial system, can impact the effectiveness of the AML framework or the AML guidances. So, what are the best practices for implementing AML controls in foreign branches, tailoring policies to the local regulations. So how do you do that? That is, develop AML policies and procedures that are tailored to meet the specific regulatory requirements of each jurisdiction. That is for each and every area, like each and every country. Ensure these policies align with both local regulations and the global standards. Engage both the local legal and compliance experts to ensure that the policies are compliant with the local laws and are effective in addressing local risks also. They have to ensure adequate resources also by allocating sufficient resources for AML compliance, including hiring and training staff who are well versed in the local regulations and AML practices. Technology and tools are to be used, like investment in technology and tools that support AML compliance, such as transaction monitoring systems, and ensure they are adapted to handle jurisdiction specific requirements. By conducting regular audits of AML practices in the conducting internal audit in foreign branches to ensure compliance with local regulations and identify areas for improvement in the same. Also engage third-party auditors to perform independent reviews of AML controls and practices in foreign branches, providing objective assessment of their effectiveness. So this will help in implementation of the AML controls in foreign branches. So what are the importance of central coordination, or what is the need of a central coordination in foreign branches? We should have a centralized policy framework which can establish a centralized AML policy framework that sets the overall standards and guidelines for all branches while allowing for local adaptations. This ensures consistency in AML practices across a bank's global operations. Create a clear governance structure with designated roles and responsibilities for AML compliance at both the head office and branch levels. Facilitate regular communication between the head office and the foreign branches to ensure any changes in regulations or AML practices are promptly communicated and implemented. Share insights and the best practices between the branches to enhance the overall effectiveness of the bank's AML program. Oversight and monitoring can cause a problem, wherein implemented centralized oversight mechanisms to monitor AML compliance across all branches. This includes reviewing compliance reports, tracking key performance indicators, and addressing any issues that arise. How do you go for the risk management? It is by conducting a global risk assessment to identify and address AML risk across different jurisdictions. By using this assessment to tailor AML controls and allocate resources effectively. It also establishes procedures for managing and escalating AML incidents, ensuring that the issues are addressed promptly and appropriately at both the local and the global levels. By adhering to all these practices, banks can effectively manage AML compliance across different jurisdictions also, ensuring that their foreign branches operate within legal framework while maintaining a consistent and robust AML program. Strong central coordination and oversight are crucial for achieving this balance, enabling banks to navigate the complexities of the global AML compliance while mitigating the risk effectively. With this, we come to the end of this session, or end of the module 1, that is money laundering. In the next video, we will start off with KYC, know your customer, and we will be going through the circular issued by Reserve Bank of India. If you have any doubts, please feel free to put it up in our comments, and any feedback from your side is also welcome. Thank you. This is Nishant signing off from Brilliant Backers. Jai Hind. Do not forget to like, share, and subscribe our channel. Jai Hind.